The unemployment picture looks very different today than it did in 2008, when the U.S. economy was losing thousands of jobs each month. Back then, millions of homeowners were facing foreclosure, and the auto industry was in danger of collapse. Today, unemployment is at a 9-year low, wages are rising, and the construction sector, which saw massive job losses during the Great Recession, is now growing faster than the overall economy. Ken Simonson is chief economist at Associated General Contractors of America.
Construction employment went up by 19,000 in November alone and by 155,000 over the past 12 months.
Among the best indicators of a healthy job market is increased competition for workers, says economist Gus Fauché at PNC Financial Services. He spoke with us on Skype.
With greater competition for workers, businesses are being forced to raise wages, and that means more money in consumers' pockets.
The White House has the latest job numbers. 178,000 added in November marks the longest streak of job growth in U.S. history. But a spokesman for the incoming Trump administration says since 2008, manufacturing has lost more than 300,000 jobs. Some economists say that may have more to do with automation than actual demand. A bigger challenge for manufacturing may be the growing anti-trade sentiment in this country and the president-elect's stance on immigration.
If we want to see sustained economic growth, we need to get more workers, and they're not going to spring up out of the domestic population. We do still need immigration.
Challenges aside, Fauché says economic indicators suggest a 90% probability of an interest rate hike soon.
We're seeing inflation pick up a little bit. The job market continues to improve. Wage growth is accelerating, so the Fed wants to be ahead of the curve.
A majority of economists believe the Fed will raise interest rates by a quarter point when central bank officials meet in mid-December. It would be the first rate hike since December of last year. Mil Arcega, VOA News, Washington.